along with stronger operating performance in the quarter gone by. And as I mentioned, we have the management of Indigo Paints now joining us. Mr. Hemant Jalan, Chairperson and Managing Director of Indigo Paints, is now with us. Mr. Jalan, thank you so much for taking your time out and joining us here on ET Now. And let's start with the solid revenue growth that you've reported in the quarter gone by, coupled with double-digit volume growth in the first quarter. What were the main drivers? What led to this kind of growth? And most importantly, how much of this growth is sustainable over the next few quarters?
See, we had been mentioning in the last few quarters that the demand slowdown that the industry had been plagued with for almost 2 years, that was kind of getting over post Diwali of last year. And progressively, every quarter, you could see the consumer demand coming back to its normal levels. So on one side, we have the tailwind of a good consumer sentiment, which seems to be improving as we go forward quarter by quarter. Secondly, at the end of last quarter, we had announced that we intend to pursue a slightly different strategy going ahead, where we will be focusing more on top-line growth, for which we are willing to spend aggressively, whether it is on trade discounts or on influencer engagements, etc. And even if it hurts the bottom line a slight bit, we won't really mind. So the strong revenue growth that we have seen has been a combination of both of these factors: improved consumer sentiment and our increased aggression as far as the market is concerned.
Okay, so several factors that aided growth in the first quarter, and you've given about 24% revenue growth guidance for FY27 as well. That is 2 times the industry growth rate. Mr. Jalan, what gives you the confidence of being able to achieve this? And is this on the conservative side, or is it perhaps more optimistic?
I am frankly not aware of any revenue guidance numbers that we have given for the full year. So I don't know where that percentage number that you're talking about comes from. However, we do expect that the gap between the industry growth and ourselves would widen as time would go on. Where that number would settle down on, what would be the effective industry growth and what would be our top line growth number, I would not like to put a number to it, except to say that we would expect to go even more aggressively, because as I said, we wanted to spend aggressively even if the bottom line started hurting a little bit. Now, the bottom line is not hurt at all. In fact, the bottom line has grown faster than the top line, which means that we are probably not doing enough and we can afford to do more. So we can be more aggressive in the next few quarters. And if that happens, we would expect the top line to grow even faster than what we have been growing in Q1. That's all I would say, rather than giving a specific number guidance as to what the growth rate would be for the full year.
Okay, we get that point completely. And one of the factors that will remain at play will also be volume growth, especially from the premier exterior paint segment and the roof coating segment. I understand that you cannot probably give a guidance, but directionally, what is the volume growth that you're looking at?
See, now with the price hikes that the industry has taken, the value growth is going to lead the volume growth by around 6-7 percentage points at least. So therefore, by deduction, if we talk about a value growth in excess of 20 percentage points, you would talk about an overall volume growth somewhere in the region of about 13 to 14%. That is what we would roughly expect. How much that would be for each sector is a little harder to predict. However, over time, in the last couple of years, we have seen the growth in the premium end of the emulsions to be higher than the overall basket of goods as far as Indigo Paints is concerned. And that is a result of our strong engagement with the influencers, and we expect that trend to continue.
Understood. So volume growth is likely to be very strong, and one of the factors that will aid volume growth will also be market share gains. If you can take us through what the market share is currently, especially for the decorative segment, and how is it expected to shape up going forward, given that you're already working on expanding your market share?
It's hard to give an exact number. It depends upon how you calculate the number, whether you only take the listed players or you also include the unorganized sector for which the data is a little thin. But roughly, our overall market share would be in the region of about 3%. And as long as we grow faster than the industry, arithmetic tells us that our market share would progressively increase. Now, how much that number would be at the end of the year is a little hard to predict. And I would hesitate in giving a quantitative number on that. But we do expect market share gains going forward as long as we continue to grow faster than the rest of the industry.
Meanwhile, lower monsoon intensity and potential El Nino, is that likely to aid volume growth? Is that one of the factors which is at play this year versus other years?
A little bit as far as June was concerned, that monsoon was late this year, and therefore June was better than June of last year, where we had an early monsoon. But we have had pretty good monsoons in July, and it continues well in August. So I don't see much of an effect of monsoon. However, we do have a late Diwali this year compared to last year. And whenever we have a late Diwali, and Diwali is, I think, 8th or 9th of November, usually that means that the pre-Diwali sales would be very heavy. Of course, that is followed by a slight lull post-Diwali. So overall, in the whole year, I think these things even themselves out. And they may create slight distortions going from one quarter to another. But as far as the overall year is concerned, I think we all hope for a healthy monsoon, not excessive, not deficient. And that is good for the economy as a whole, especially for the rural part of India. And it looks like we are getting kind of a reasonably normal monsoon as of now.
Okay, and Mr. Jalan, one last question before we let you go, and that has to be on your capital expenditure plans, and I believe you have quite a few. One, of course, is the water-based plants, which has about 90,000 KLPA capacity. What is the progress over here, and what is the capex plan? Any other capex plan other than this particular water plant that you're focusing on?
So this water-based paint plant at Jodhpur is virtually complete, and we expect to start the trial productions in the next week or 10 days. And we hope that the complete stabilization of the plant would happen by end of September. Other than this, there is no major capex that we are looking at for the next 3 years. I think our capex cycle is behind us as far as the midterm is concerned. We did have a major expansion at our Tamil Nadu plant, which was completed a couple of years ago. Then we set up an expansion in our putty manufacturing facilities at Jodhpur and setting up a solvent-based plant at Jodhpur, both of which went into stream about 5 months ago. And now with the commissioning of this water-based plant that we are setting up at Jodhpur, which is an expansion plus a modernization of our existing plant at Jodhpur, I think we do not envisage any significant capex going forward, at least for the next 3 years.
So that's the view with respect to capex plans going forward. Mr. Jalan, thank you so much for taking your time out and joining us here on ET Now and sharing your thoughts on what the next few quarters could look like. Thank you for joining us today.